Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to rip through Twitter, see what people are sharing on social media, generally related to three different topics: wealth building, commodities, and or financial topics. I'm going to sprinkle in my opinions as we go. So let's see what's going on in the Twitter world. You want to follow me at Finance Score Finance, and you can join our community, finding-value.com, where I dive deeper into these topics and figure out ways to play this commodity bull market using vehicles, aka stocks, to play this and or physical metals. So Calvin Freod says it's hard for some people to get this. Metals have had several hard moves higher over the last century, exponential moves higher in dollar denominated terms. They happened at points of monetary turmoil and physical deficits. We are staring down the perfect storm right now. Gold above 2,400, silver above $30 an ounce, platinum above 1084, and palladium also moving higher. So we've got what I think could be some of the largest chart pattern setups that I've ever seen in any market at any time that I have seen. We've got huge patterns in platinum and in silver. Huge, huge patterns. Gold's got a big pattern too. It's a cup and handle on like a 14, 15-year chart pattern. Silver goes all the way back to the 70s, an 80 peak and the big cup and handle from that. And then platinum's good 15 years as well. There's also an unspoken ratio chart that I have on platinum versus gold that is squeezing to the tip here from the 1800s. If that actually unloads, I am very curious to see how high platinum goes. We could see or experience platinum going to 5 times the price of gold. Yeah, I said that, 5 times. So if gold is going higher, there is the possibility, I'm not stating that this will 100% happen, but it's possible that we break out of that big ratio chart from the 1800s and retest those highs again. And we'll see if that occurs. What I'll say. OPEC global oil demand growth in 2025 is expected to remain robust at about 1.8 million barrels per day. OECD demand is expected to grow by 0.1 million barrels per day, while demand in the non-OECD is forecast to increase 1.7 million barrels per day. We've got power burn up for natural gas, about 5% year to date. You can see the 2024 versus 2023 change in terms of electrical power generation burn from natural gas is increasing. Now, I've heard a lot of people say, well, that's not baseload power. Well, natural gas in America provides for electricity driven power about 4 times the amount that uranium does. And it is increasing rapidly. So I don't want to hear about baseload power and natural gas when natural gas provides baseload power at a rate 4 times that of uranium. Now, I'm not anti-uranium. I just want to make sure that people understand that yes, baseload power is coming from natural gas. Natural gas is also your swing producer. And I think that there's a lot of weather dependent things in this world that could dramatically increase the demand for natural gas, whether it be used for heating in the winter or negative side effects from uh, summertime weather like hail destroying solar, wind turbines not receiving wind, and natural gas production being disturbed by hurricanes. I mean, there's all these different things that can occur. And the way that I see it is I think the downside risk is pretty much beat out of it. And we've got a whole bunch of upside potential that we just don't know what the weather has in store. We just don't know if it's going to come or not. So there's my take on it. Julian says, we believe bonds are in a structural bear market that, absent intervention, will see yields rise for the next 20 years, and you need a new hedge. Note that on a total return basis, i.e., plus interest, treasuries have broken 35-year support versus gold, and the next target is 20% lower. Yeah, I wonder who said that back in 2020 and 2021. Yeah, it was me. I said, you know what? There's going to be a lot of pressure for yields to continue higher and break that 40-year downtrend. It's a paradigm shift, is what I would call it. And I have positioned as such for that paradigm shift. It pays very well to be early and right in the symmetry bets, the asymmetry that we've got there. Jesse says, can someone tell me what the actual catalyst for today's surge in precious metals? Was there a specific piece of news or was it just technical? Why are people looking for a catalyst? Why are they looking at news? The news is generated by these breakouts. There is no news. This is a one big. We've got a okay. Let me go back and step back real quick. We have a 50-year chart pattern that is breaking out. This is like a culmination of like 50 different things going on here. The culmination of potential rigging of silver or manipulation, whatever you want to call it. It's potentially there. I don't know if it's a 100% in the bag because there's a bunch of crap going on behind the scenes. We've got a technical chart pattern that's breaking here. So it's just huge. And there's all these potential reasons that people are either making up or are legit for that to occur. We've got inflation. We've got the bond market that I just talked about up here breaking lower. We've got a lot of people with a ton of money in financial assets that are about to rotate into the hard assets for preserving purchasing power. So you tell me which one out of probably 10 that I can think of, which one are you going to attribute today's move to? Does it even matter? No, it doesn't matter. All that matters is that money is going to start to flow into this. And money flows is really going to push this to the upside here. We've broken the big handle on that cup and handle, guys. Jeff Curry says copper's the best trade he's seen in his career. Yeah, these setups are ridiculous. Copper looks good. Gold looks good. Platinum looks good. Silver looks good. Oil looks good. Uranium looks good. They all look good to me. Now, which is going to be the best? What and what people do is they try to put all their money, all their eggs in one sector basket and try to guess which one will be the best. I don't do that. I spread across. I buy opportunities. If the opportunity in a copper stock was there a year ago, I bought it. If an opportunity in a uranium stock exists today, I'll buy it. If an opportunity in oil or natural gas, maybe it occurred a few months ago or 6 months ago, I'll buy that. I don't limit myself to one sector and try to guess. I buy whatever I think is a gigantic asymmetry, and then I go for it. So I have copper companies. They're generally bigger companies, but yeah, copper's looking fantastic. Here's silver, that big cup and handle I was talking about from the 70s. There's the whole thing. Whole kit and caboodle. Here we are breaking out of the handle here very soon. The handle is located at about $30-$31 on a yearly close. This is guys, you're not going to see this again in your lifetime. You better not blow this thing. You better not blow it. I purchased a whole bunch. I purchased an array of stuff here. Physical metals, producers, speculative little companies at the bottoms. I'm in it all across the board. I'm here to capture this big move that's going to go insane. While other people are saying, well, this move's pretty big here. I'm like, you've seen nothing yet, guys. This could be multi-hundred potentially, or even greater than it could be 4 digit. I don't know. But 3 digit, I think, is very, very likely and possible. I said silver cutting through resistance like a knife through hot butter, eh? And this was not today. This was yesterday at $30.76. We went up to 30. I think we're at 31 something now. Ballpark estimate of safe early retirement withdrawal amounts using the 4% rule. So if you got 1 million net worth, you can do $40,000 per year. 2 millions at 80, 3 millions at 120, and 4 millions at 160. So $160,000 per year at a 4 million net worth. That seems pretty comfortable, I would think. Cam Marzi says the fastest way to go broke is trying to be rich. A friend of mine has made 200,000 plus every year for the last 4 years, and he has nothing to show for it. It wasn't because he lived a luxurious lifestyle, dining at the most expensive restaurants, traveling the world. No, he bought into every get rich or get quick rich scheme you could imagine. He tried NFTs, day trading, started drop shipping, bought into the AMC craze, and of course, he texted me a few days back when Rory Kitty returned. He thinks it's investing. Some people are probably thinking this guy is just dumb. He's not. He's a smart guy with an extensive skill set. Great employee for anyone who he's ever worked for, but he doesn't have a knack for investing. The hardest part of investing is having strong conviction and being able to sit still. It comes down to controlling your emotions and sticking to a plan you understand and believe in. And I would say there's a lot of truth to this under here, but I also think that you have to kind of know the big macro picture. What when assets are in favor and out of favor, and you have to almost be a contrarian to get these gigantic returns that I try to participate in. So I'm buying stuff when they're down, and it's a very psychological um, mind screw, is what I'll call it. This guy's just chasing the where the puck is going, like not where it's going, but where it's been. He's just chasing shiny objects. That's all it is. The get quick rich scheme is chasing shiny objects wherever it is. You want to go where people aren't, and then you wait for those conditions to change where the money comes to you. That's what I'm teaching on the website. It's like, how do you position before the money rotates in? And then you just wait for that money to come on in. And you're all like calm when it occurs. You're like, oh, it's a 15% up day in these couple of stocks that I purchased. Great. I don't have to worry. Another 100 million Fed intervention becoming more frequent. This is stealth QE. Banks showing some small fractures here. So what is this? This is the overnight repurchase agreements, Treasury securities purchased by the Federal Reserve in the temporary open market operation. What's going on here? Over the past, I'd say 3-4 months, why do we have 100 million in overnight repurchase agreements popping up all over the place? 100 mil, 100 mil, 100 mil. Uh, this is 50 mil, 100 mil again. What is going on here? Is there something going on? Is this money that's being created out of nothing? Probably. And maybe that's what's driving the market, is that maybe people behind the scenes know that the Federal Reserve is going to have to lower interest rates and or print a bunch of money and do some bailouts. I'm not sure exactly what that information is, but we can definitely see that money is rotating different and into precious metals and into commodities. So maybe this is tied to something that people know, background information, and the banks are positioning in this stuff before an official announcement comes out. Maybe, and I don't know. I'm obviously speculating there a little bit. People bearish on the consumer are legit immune to data. The gas price spiked. It's down. 10-year is down. Home price is about to explode again. We just repeat the same mistakes every time, the same mini cycle. Need a few hot data points and the Fed will push us back into the band again. So this is B of A, lower income consumers, no clear signs of cracks is what they are saying. Lower income spending has generally outpaced higher income spending on a year-over-year basis since early 2023. Even necessities. This is consistent with the strength in blue-collar wage growth since the start of the pandemic. And I know a lot of people recessionary things, a lot of credit card defaults and all this other stuff, but this is kind of positive news that maybe it isn't as bad as what people think. Maybe, but wanted to share that information. Here's Grady here. He says the silver gold ratio here, which is the reverse of the gold silver ratio, has a cleaner pattern than the GSR big picture. 2020 March crash low was the shakeout. This chart is now ready to deliver a historical up move and a lifetime opportunity for precious metals. The ride of our lives is starting. Get ready for it. And this is the silver to gold ratio that is basically breaking out right in front of us. This is a 43-year chart. It's a big bowl-shaped pattern. And what he says is, when the ratio moves up, the precious metals sector moves up, since silver leads gold in a bull market. This is the shakeout on commodities bear market low back here, and we've got a expanding falling wedges are usually very bullish patterns with the nice setup here. Very nice setup. Here's silver production and AKA shortages. The silver market heads for a fourth straight year of shortages or deficits. The second highest deficit on record is forecast for 2024 in terms of the silver market balance. What occurs is you start to run deficits, it'll eat through your inventory. Once your inventory hits critical levels, the price really starts to move. And I think that's what we're probably hitting right now. We're hitting critical levels in inventory, whatever the market deems to be critical, and then we rip. And if we continue to run deficits, the price is going to continue to run up. And this is where it gets interesting, because if the deficits are big enough and we get financial demand to stack on top of this, we could trigger a industrial demand shock, so to speak, because industry needs this stuff, the materials, raw materials, to continue to run their manufacturing operations. Their free cash flow is dependent on having usable, available metals and energy available to them. And when something starts to get into a deficit, I think they could panic and just start buying up a bunch of inventory and or start buying mines outright. So I think we've got a really interesting setup here. This is wow, the China real estate crisis just got worse. Chinese home prices dropped a staggering about 1% in April. The second biggest decline on record. Home prices have declined in 30 out of the last 33 months. China's housing market recession has been going on for nearly 3 years. Retail sales, also published today, grew by a paltry 2.3%. China is now floating the idea of buying massive amounts of unsold houses through local governments. So this is what is occurring. The Chinese home prices, you can see they are going down. This is what a recession looks like. And what's driving this is a lack of the demographic growth coming into home buying years. It is a true problem. And it's truly driven by the demographic of Chinese people, not their population shrinking at home buying years. And that's what the resultant outcome is. Grady says the big breakout level for silver using the yearly time frame is $31 to $32 an ounce. And it's not the 38 to 50 that is on lower time frames. The blue tightening arrow patterns means that a breakout is coming. A 45-year very bullish pattern, let that sink in. and it is now right up against the neckline. And what he calls this is the mother of all very probable cup and handles, a 22%, the bigger the base, the higher in space. He's got a fractal smaller cup and handle here on the right hand with the big, huge one here. The measured move is a target price of $248 per ounce. $248 per ounce is what he's got here. The blue line. Okay, so I've already went over this, so we'll end it there, guys. This is what we've got. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you want. We've got a May Day coupon code, MAYDAY, if you're interested. We've got a Sunday question and answer session coming up at 5 p.m. where I'm going to dive into some trading view training. But that's what I've got. We'll catch you next time. This is Finding Value.